Hello and welcome to this episode of Fest. My name's Joe McGrath, Consulting Editor for Open Banking magazine, and joining me today is Simon van Skalina, the co-founder of Fronted. Hello, Simon.
Hi, how's it going?
Simon, you're probably best known as being a former engineer at Monzo, but now I'm told you're focused on changing the face of the rental property market using open banking data. Do you want to tell us a bit more about that?
Sure. So about a year ago, after I left Monzo, I co-founded a company with a friend of mine, a couple of friends of mine, Jamie and Anthony. And what we're going to do is we're going to lend people money for their rental security deposits. So the 5 weeks rent you have to put up to move into an apartment. And we're using open banking to basically, like all lenders basically use credit history to determine whether or not you can afford a loan or whether you're likely to pay back. But we're going to lean into using open banking to work out whether you can actually afford to make repayments. So that's basically what we've been working on for the last year, and we're hoping to launch sometime around Christmas or sometime in the new year. So that's basically the plan.
And why the jump from Monzo? Would you say the rental property market is that broken that you just couldn't resist, or were there other reasons?
Yeah, so it actually started with my colleague Jamie's girlfriend. She was living in a flat and had a disagreement with the landlord, and didn't have a deposit saved up. Really wanted to move out of her flat, but she was stuck in the situation where she hadn't been working long enough to save the money to have a second rental deposit. And Jamie, being the good boyfriend that he is, instead of just lending her the money or saying move in with me, he decided to found a company and fix renting for everybody else. Massive overreaction, but it turns out it's a problem that a lot of people have. A lot of people say they have to borrow money from friends or family or bank of mum and dad to get that first rental deposit, rental security deposit. And it's a big problem. Like once we started talking to people, it's a story everybody has. And it's a very weird niche form of lending because the rental security deposit goes into a government escrow scheme, the deposit protection schemes. So effectively, it's a very safe form of lending. And it's a form of lending where people shouldn't be paying 40% interest on using their overdraft or having to find family and friends to put that money up. So that's why we're doing it. We think it's more important. We think it's a low moral hazard form of lending, and it's just something that will help people to achieve mobility in their lives, social mobility, to be able to move closer to work or move out of central London if they're working from home. It seems to be the big shift in the workforce at the moment. So we think it's a really well-timed product and something that open banking enables us to do, because we can lean into affordability rather than credit history. Because a lot of young people, they don't have a credit history. They're what's called thin file customers. And the advice that's generally given to young people is to get a credit card and just put one thing on it a month just so you can build up credit history. And that's terrible advice. You shouldn't take out debt just because you want to build up credit history. So we think that the fronted deposit, because we're going to rely on open banking to assess affordability, is a safer way for people to build credit history rather than taking out a loan or a credit card they don't need.
Yeah, I mean, it's some years ago for me now, but I remember vividly as a junior journalist having to get the rent deposit for my first house, and it was a struggle when you're on a low salary, particularly. I think you've sort of articulated there how the rental market doesn't necessarily favour the consumer, or traditionally has. But perhaps you can tell me a bit more about how open banking and open banking data is playing a part of your proposition and resolving the issues that you talk about.
Sure. So there's a couple of things that were non-obvious to people about open banking data, and I hope I'm not giving away too much of our company secrets by saying this. Like 5 years ago, I started, 6 years ago now, I guess I started at Monzo. And for the last 2 years, I was heavily involved in open banking. I built the first version of Monzo's open banking API. It was called the AIS API. It came out about a year before Monzo actually implemented the open banking implementation entities API, which is the official UK banking API. But we did that about a year before we had to, because we wanted to see what type of companies would connect and what propositions would be built on top of that data, and what businesses would be enabled by that data. And Fronted is born on it was based on the idea that housing is a consumer right. Like, you have a right to have a roof over your head. There's very few reasons why a society should say to people like you don't have a right to have a roof over your head. Like, as a society, we should be doing everything we possibly can to make it so that everybody can get home. And open banking lets us do a couple of things. Like, all lenders are subject to, unfortunately, first-party fraud and subject to losses caused by people's life circumstances changing, or people borrowing money that they shouldn't borrow money for, to make hazardous borrowing decisions. Open banking lets us look at people's affordability. We can look at people's transaction history to see how much money they have left over at the end of the month, to see whether their financial status is declining, and to make sure that we are good lenders. We don't lend people money that they're not going to be able to repay, and we don't put people in a situation where they're going to end up in debt and damaging their credit history. So open banking lets us be good lenders. The other thing that it does is it lets us rely on the KYC and AML of the banks. Like, banks do a pretty good job of checking a customer is who they say they are before they give them a bank account. And Fronted, by using open banking, by making the only way you can sign up to Fronted to be going through open banking, it lets us sit behind that bank grade AML and KYC, or that's anti-money laundering and know your customer and identity verification. It lets us sit behind that so that we're not subject to the same kinds of first-party fraud that other lenders are, and that helps us keep our rates low. So it allows us to provide credit a lot cheaper than people with thin credit files could otherwise access it.
Let's come back to the process and things like looking at affordability in just a second, but I know that many of our audience will have a degree of empathy with you on the journey of establishing a business, and all the frustrations and highs and lows that come with that. I'm sure it would be good to know and hear from you, sort of this long into the Fronted journey, what do you think have been the main challenges so far? Obviously, there's the big COVID elephant in the room, but what have been the sort of highs and low points so far, and the main challenges for you and the team?
Yeah, so we're part of cohort 6 of the FCA Sandbox. So the FCA Sandbox, for those people who don't know, it's a scheme run by the FCA that allows companies with novel propositions to bring them to market in a way that is supported by the FCA and a little bit cautious. And it's for companies whose customer proposition, or whose propositions are both novel and in the interests of consumers. So we're going through that Sandbox program now. So we're working with the FCA to get our authorizations in place. I guess one of the big challenges this year, obviously, has been it's been a tumultuous year for the financial industry and for the Financial Conduct Authority. The FCA Sandbox Cohort 6 launched about 6 months later than was intended because of the pandemic and things like things that have been keeping the FCA busy. So as a startup, you have a limited runway. You raise enough money to get to launch, basically. So we've had to, like a lot of companies, we've had to reduce our burn rate and stay as lean as possible for as long as possible. But we're pretty excited. We've now got all our technology is built. Our regulation is about to arrive. Our technology is great, and everything is in place basically for a launch. So we somehow seem to have scraped through it. Like I don't know if many of the audience have started venture capital backed startups before, but when a company is very, very fragile when it starts. Like it's very, very very lean, because you don't raise a huge amount of money at a low valuation. You want to raise a small amount of money and then raise money again later. So we were very lucky to survive and to get through, and we took advantage of the government's support for startups in our stage to get this close to launch. So hopefully we're launching pretty soon, and we think we're launching into a market which is completely ready for a service like Fronted. Consumers tell us that there's a lot of people who've been trapped in houses during lockdown with flatmates they can't stand anymore, or they just wish they had a place with a bigger backyard, or couples that have unfortunately split up but neither of them have the rental deposit to move. And Even before coronavirus, I think there was some university research that said there's about 2.3 million hidden households, which is people who are living in suboptimal living conditions, that would move if they just had the liquidity for a rental deposit. So and I think that problem is almost certainly worse now. Like all my friends are basically moving from Shoreditch to Leighton and Wanstead just so they can have a backyard and go for a walk in the sun. So I think people's preferences around where they live are changing. A lot of us aren't commuting to work anymore. So it's a fantastic launcher company like that. So we're just really counting down the minutes until we launch now.
Yeah, Wanstead's a very lovely area. I know it inside out. But I guess I should ask you about the point you make about VC-backed startups. Now, I think there's an old entrepreneur's adage, which is stay small as long as possible, which seems like the opposite of everybody in the world of open banking. For you guys, what's the plan for scaling up?
So starting a lending business is quite a strange business. Like lending businesses are quite capital intensive, because at the beginning of a lending business, you have to prove to banks that will lend you the money that you can then lend to consumers that you're doing a good job underwriting and finding consumers that are going to repay you, and you don't have any history of that. So starting a lending business isn't like starting other VC-backed businesses. Other VC-backed businesses, you launch and you try and just get as big as, hyperscale as quickly as possible. Startups are obsessed with books like the High Growth Handbook and Blitzscaling, and that is not something that you can do as a lending business. You have to get vintage and scale. You have to prove that a loan, it might be a 12-month loan. You have to prove that customers are repaying you, and there's no way to fast forward a 12-month loan. So you have to sort of like come out of the gates quite cautiously, and until you've sort of proven that you have an edge, proven that your decisions are good, and for us, and this is why we're in the FCA, prove that open banks us make good credit decisions and lend to customers. It's not putting them into financial difficulty or stress. So that's basically mission number one for us, is to get to market, to prove to the FCA and that we can lend safely and responsibly, and hopefully make a bit of revenue from those loans as well, and then scale. So it's going to be a very measured launch for us.
Okay. I should ask as well. We talked briefly. We sort of danced around the COVID-19 thing, and you talked about how that initially gave some delays in terms of the plans you had of working with Cohort 6, the FCA sandbox. The pandemic's also presented sort of challenges to consumers and businesses in many different ways around the world. But would you say that the timing is actually better for Fronted to disrupt the rental property market as a result? You talk about who are itching to get their own place and to make life-changing decisions. Are you expecting the pent-up demand to be ready to go once the sort of restrictions lift?
I think so, yeah. I think so. I also think what we want to test that you can, like a lender can lean into affordability instead of credit history. And most lending in the past have been banks lending to their own customers, where they have proprietary data. They can look at their own customers' transaction history and do credit scoring based on that. Non-bankers lending to customers using only credit reference agency data. And we want to work out whether, now that data is available for all consumers, we want to work out whether or not non-bank lenders can lean more heavily into affordability and rely less on credit history. And that's interesting because coronavirus, or the pandemic, has changed a lot of people's life circumstances. People might have been put on furlough, or they might have been, had reduced income, or they might be working for companies that are not going to survive the recession that's probably going to come out pretty soon. Well, actually, I think we're technically in a recession now. So credit reference history doesn't tell you about people's life circumstances when they change. It only tells you about whether or not they repaid their loans in the past. Whereas open banking information and proprietary data that bank lenders have tells you about what people's life is like now. A good friend of mine from Monzo used to say, lending to people based only on their credit history is like driving down a dark road using only the rear vision mirror. So open banking lets non-bank lenders work out what someone's life circumstances is like now. Like, are they still receiving full salary, or are they receiving salary, or are they not receiving any salary in the last month? So it will allow us to make home affordability decisions than you can get from just credit reference history. So that's what we're going into FIVEyear to test. As to your question, like what we think it be like, we only have anecdotal data about like all of our friends seem to be wanting to move house right now. Like, I've seen more people move house in the last 2 months than you normally see in a year. So I think it's going to be a good time to launch.
What would you say is the 5-year plan for you and your 2 co-founders then from here on out?
Yeah, so our basic plan is to launch our first product, which is the fronted deposit. That's the loan product. And then we want to tackle other problems related to renting and moving as well. So we're going to move into providing a bunch of different services through an app, basically. We call it the super app for renters. And what we really want to do is we want to build a marketplace for renters, because there hasn't really been one that is 100% on the side of the renter. There's lots of prop tech and fintech companies out there that are providing services to landlords, but no one that's really doing it on behalf of a renter. And there's really, like, when you talk to, so many of my friends are renters, and there's this huge gap that needs to be filled. Renters don't know things like, when you rent a property, the landlord has to protect your deposit, and they have to do it within 30 days. Otherwise, you can get 3 times your deposit back. Things like, if a light globe blows, or if there's something wrong with the property, you should report it as a maintenance issue. Otherwise, you end up having to pay it when you move out. And like, all of this information that should be given to renters isn't being passed on to renters. So renters inevitably get the short straw when they move out. So we want to be the first app and the first service that's completely on the side of renters. And there's a bunch of different problems that we want to solve there. We want to help people with their bills. We want to help people with their rights. We want to help people by giving them information and basically, like, become a union of renters, or become a service that's basically like 100% on the side of the renter. So we're not going out there trying to build services for landlords as well. We're not trying to build services for estate agents. We're just building something that empowers renters, and that's basically our 5-year plan, is to take over that doesn't exist there right now.
And you say that you've got no interest in building services for landlords or any of those organisations that are on the other side of the fence. What's the sort of implications for collaboration across the market then? Do you have to work slightly differently with landlord associations and organisations to make sure that they understand the proposition?
So one of the things that's exciting about our proposition is that we don't need estate agent and landlord buy-in. Like, other rental deposit systems require you to, they require a habit change in the market. If you want to use one of the competing rental alternatives, you need the landlord to agree to take this alternative insurance-based product instead of cash deposit, right? And you need the estate agent to agree to sell that to the consumer. So you need this sort of and then you need the consumer to agree to what is often a very expensive product that renews annually. So you need this 3-way buy-in, and they're not very consumer-friendly products. Like, the insurance-based models, I've looked into them a lot when we were looking at starting Fronted, and they're terrible for consumers. Like, the insurance-based products are very, very expensive compared to the interest on a loan. And at the end of your tenancy, you move out. You don't have a deposit you can take to the next place. So we really like the front door. Consumers have paid off their deposit. It's their deposit. They have savings then that they can use to take to the next place. And I've got this saying like cash is the universal API for getting stuff done. We lend cash to the consumer, so the consumer turns up at an estate agent as if they had saved the cash, right? So it doesn't require a habit change from the market. It doesn't require the buy-in of landlords and estate agents. Landlords still get what they want. They want cash. They want to have cash they can put into the rental deposit schemes, and then quite often they can get that cash back from the rental deposit schemes in exchange for a bond, and they can use that cash to improve their properties or to buy another property. So it's just a product that needs to exist. Does that answer the question?
Yeah, I think so. I'm sort of piecing together how your proposition might transform the space more broadly. So forgive me if I ask just one more follow-up. As I say, having gone through, having witnessed this market firsthand, and I was starting out my career, I remember the sort of hurdles that you had to jump. And you talk extensively about the importance of looking at affordability and not necessarily relying on and the sort of traditional processes that you go through. But of course, when you're applying through a letting agent or something like that, they will run their own checks, and often a credit reference check is part of that. Is there anything that you think that could be done to sort of make that more efficient, that you might be able to assist with and sort of build out the proposition more sort of more broadly?
Yeah, I really fully expect most tenant reference checks to incorporate open banking very, very soon. It's just such an obvious use case. It's actually one of the first use cases that I saw coming when we built the AS API at Monzo. So about a year before open banking started, we became aware of a few companies that were basically planning on doing tenant reference checking based on open banking data. And I think that is actually something that I think needs to be. It's very early and it hasn't really taken off yet. There's a few companies I don't want to name that are doing it, but I think it is an area where I think there should be a bit of regulation. There is a bit of risk there. We don't want to end up in a situation where people are being turned away from renting properties based on lifestyle choices that they make. If somebody chooses to drink it in the Dolphin Bar in Hackney at 3 o'clock in the morning on a Monday, like you imagine a scenario, a landlord might look at that and say, like, I don't want to rent my house to that type of person. So I think there needs to be regulation around that. I think you need to be very, very careful around that to make sure that open banking is used just to judge affordability and not make decisions. So, like, Fronted is a regulated lender. Like, we're only allowed to make underwriting decisions based on policies and procedures that are reviewed by the Financial Conduct Authority. So we're regulated. When tenant referencing agencies and estate agents get into the business of using open banking data, they're not regulated. They can make those tenant referencing decisions based on less clearly defined parameters. And there is a long history of landlords discriminating against people that I think needs to be very, very carefully looked at. And like, I don't know how to say this in a clearer way. I'm very, very concerned about open banking being used for tenant referencing until there's regulation. I think that should actually be a regulated activity. But the market's still pretty small, and there hasn't been any egregious abuses of that yet. So we'll see. I expect that to develop in the next few years. Good question.
Okay, we'll thank you. We'll step quietly back from that. Maybe it can be broadened out, the questioning in the Q&A. I'll just ask you also about the obvious one, which I perhaps overlooked when you were talking about your plans for development and expansion further. But there's obviously a natural read across from what you do perhaps to the commercial space. Did you have any plans to enter that market?
No, we don't. commercial lending is regulated differently. It's actually not regulated in the same way that lending to consumers is. So a lot of the space that a retail lender or non-bank retail lender, a lot of the policies and procedures and technology is built to underwrite consumers. There's not a huge amount of crossover into commercial lending. Commercial lending isn't regulated in the same way, and I'm not sure that there's as much good affordability signal in the open banking data of companies compared with like commercial lending tends to be for big tickets, like big amounts of money, right? And every company looks very, very different, whereas a lot of consumers look very similar. Like consumers have a PAYE and they get paid once a month and they spend money, and you can see they can see what they choose to spend their money on and how much money they have left over at the end of the month. Whereas every company looks wildly different. Some companies might go 6 months without making a single sale and then do a huge sale and stuff. So I'm not sure there's much value in trying to build a heuristic or an algorithm to score companies using open banking data in the same way that in the same way that you can score individual consumers. I think there's a lot of interesting work that's going to be done around trade finance. So looking at people's invoices and connecting to their sales systems and their inventory systems I know a lot of companies a lot of banks and a lot of lenders are working toward getting access to that information so they can make better lending decisions. But no, we're not looking to go into the commercial property market at all.
Okay. And to sort of round up your journey so far, what would you say has been the most surprising thing that you've encountered? Perhaps you thought that you knew the market completely, and you've sort of come across something which has stood out as that's really shocking or surprising.
I'm not sure it's surprising so much as new to me to learn, because at Monzo I helped build a bank, from the beginning, and I got to see it was an incredible experience, and I got to see that whole side of capitalism, that whole side of how the deposit side of capitalism works. So consumers put money into Monzo, and then Monzo stores that money at the Bank of England, and and lends some of that money back to consumers, and eventually will lend money back to companies as well. On the other side of the balance sheet is companies like Fronted that go to banks, commercial banks, and borrow money that they can then lend to consumers. So that's like the cycle of how finance works, or how the economy works. So it's quite strange to go from being on the bank side, where Monzo pays, I think if you sign up for Monzo Premium now, you can get 1% interest, or I'm not exactly sure, don't quote me on that. So Monzo pays a small amount of interest to consumers, and then charges a larger amount of interest to borrowers. And then to be on the other side, where we're going to commercial banks and saying, like, we'd like to borrow some money, and then they give you this headline interest rate that's so far different to what that they're paying their depositors. It's really, really, really interesting. And we came up with this analogy we call climbing Mount Finance, because the first step is really, really big, and it's really, really hard to start a lender because you've no history. They have no idea if you're going to make good underwriting decisions. And then each step after that, like the steps get bigger in terms of the amount of money you borrow, but in some ways they get smaller and easier. So somebody should write a book about how to start a lender, because I would love to have read it. So that was quite new to me. But it's fascinating. It's absolutely fascinating how debt works, and senior finance and mezzanine finance and all that sorts of things. And you can just see that it's going to change so much. I'm a bit of a cryptocurrency wonk. I think Ethereum smart contracts are going to change a lot of how companies raise funds. Once they've sort of regulated, and AML and KYC is available in that space. I'm very excited about that. So learning about how it all works now, and how inefficient and bespoke every deal is, and then seeing how it could be in the future, has been really, really fascinating.
I've just got to ask you, because you said it would be fascinating to read a book, How to Start a Lender. I remember writing about the last time that a revolution was called in the lending market, when I was editing a magazine back in the about 2005, 2006, in the run up to obviously the now global financial crisis. And at that time, it was to do with smart underwriting decisions being made for first and second charge loans and for commercial mortgages. Do you think that the market still has any relevant lessons to learn from that, from what went wrong in terms of where it made its underwriting mistakes, or where it secured its warehousing or funding lines from?
Yeah, so I mean, I think a lot has changed in the lending market, right? Like lending in the post-Wonga era moved from the Office of Fair Trading to the FCA, which is a lot more firm around lending, and there was a high-cost short-term credit review, which has broadly, I mean, I don't agree with everything they've done, but it's been very, very good for consumers. I think the market now is a lot more strictly regulated, which I think is good. I think is good for consumers. I think the difference was previously, like we're not a normal lender. Like normal lenders, they try to lend to riskier and riskier customers at a higher and higher APR, right? That's like the normal path for a lender. They try to look for higher and higher rates for customers that are still going to pay them back. We're the exact opposite. We're trying to make our loans cheaper and cheaper and cheaper and cheaper and cheaper. So we're the default option for everybody. So we're not like a normal lender. We're not trying to make riskier loans at a higher APR. In fact, if we could make our loans 0%, we would do it. Because what we want to do is we want to own a financial services relationship with customers that we can then use to get customers the best deals on things. So we're not like a normal lender. Like we don't really look at riskier and riskier deals and riskier consumer propositions. Everything we're doing is to reduce our APR so that we just become one of the default options.
Simon, there's some fascinating insights there. I'm just going to recap prior to going into the Q&A. So obviously, we heard from you about the fascinating story of being part of the cohort 6 of the FCA's sandbox, and the slight delays that we saw from COVID-19. You also told us about the importance of having to prove that you have an edge, and it's important that you make good lending decisions with ensuring that the FCA can quite clearly see that you're structuring your lending decisions and underwriting correctly. I'm just looking at some of the things you said when you said you want to test that that a lender can lean into affordability and not necessarily just the credit history. We talked about what you're doing now with that, but just to really quickly to revisit that, is there anything you think you could do as you start to evolve which you haven't done to date, without giving away too much of the secret sauce? But are there things that you're looking at to further improve that for the future?
Yeah, I mean, your decision tree becomes more sophisticated over time, right? Like when you start, like your underwriting decisions are quite simple. You just look at how much money people are earning versus how much money they have left at the end of the month, and you try and work out whether their new rent plus their loan repayments on their deposit takes up a certain amount of their discretionary income, right? Like it's a very, very simple algorithm that we start with. Over time, we might become more sophisticated. We might look at, like are there other parts of people's your affordability becomes more sophisticated. Like you might say that people aren't in financial distress because they take an Uber home on a Friday night, and you don't do that manually. Like the rules become more and more more and more complicated, and you never know how to correctly weight them. So it's an area where obviously you use machine learning and you sort of back test that, and you make sure you follow GDPR and follow the EU rules on the right to an explanation as to why someone was offered credit or not credit. And it's a very well regulated area, but ultimately you're using machine learning to produce a decision tree that is your underwriting decision. And so yeah, that's a really interesting field of research for us, is to when the right time to do that is. We don't have any data yet. You can't until you have about a year's history, and you can start to back test rules. There's not much point starting work on that, but it's something I'm pretty excited about.
I'm just going to cover off a few more of the points in summary before we go into the Q&A. You said that the COVID-19 pandemic has obviously had an enormous impact on people's life circumstances. I think it was important to note that you said the credit reference history doesn't necessarily tell you the picture now. I think that you'll find a huge amount of support for that point. You told us about launching fronted deposit and how you'll be looking to expand to complementary services as well. And you want to build a marketplace that's specifically for renters. You think there's a huge gap to be filled in that, there's a lot of knowledge that's sort of falling through the gaps at the moment. Things like, the landlord's obligation to protect your deposit and return it within 30 days, or else there's an opportunity for the renter to get 3 times their deposit back, which I think is a very nice tidbit to take away. Let's make sure that's front and center up on the website when people land. You also were very explicit about your points that you're not building services for landlords. You're very much on the side of the renter, and I think that later on was revisiting your point where you said you're really keen that you want to try and own a financial services relationship with consumers. Because unlike a lot of lenders who are trying to climb that APR ladder and make a greater return, you're trying to make your loans cheaper, and that's part of the broader plan. You also talked about regulation briefly, where you said the lending review has been good for consumers more broadly, and you have seen notable improvements in the market since the move from the OFT to the FCA. And you also said that there could be potential for a little bit more in terms of regulation, specifically when you were saying that fronted are regulated as a lender, and some of the tenants reference agencies are not regulated. While you said there's been no evidence of any abuses at the moment, there is the potential there for open banking to be used in certain ways in the tenant referencing process, which could be a concern. So with all of those points sort of summarised, I'm going to just park it there so that we can go into the Q&A, and let's see what the audience has to say.
Great, thank you.
Welcome back to the live element of this session. It's great to have you with us, and now is the opportunity to ask any questions which might not have been covered off in the previous half hour. Simon, good to see you again. Just to kick off and to bring things up to date, obviously there's been an enormous amount of press coverage today in financial services, given yesterday's spending review. Now, I'm not going to ask you to recall everything that happened yesterday, but I think from your perspective and to bring things bang up to date, it would be good to ask if there's anything the government could do to boost or improve the market in which fronted operates.
Yeah, it's an interesting question. I mean, there's the 3 big things in the world right now is, are we going to have a V-shaped recovery? Is there a future where the UK becomes more supportive of new businesses, on entrepreneurial businesses, and what effect is Brexit going to have on the financial services market in London? And all the knock-on effects for the established sort of financial services economy. So it's going to be fascinating. It's really interesting. Like if we keep furlough all the way through until March and then we all get vaccinated, does the economy just pick up where it left off? We at Fronted, we anecdotally are hearing a lot of evidence that people are desperate to move house. People want to use this as an opportunity to get themselves a backyard and a dog. And so we think, come Q1, Q2 next year, there's going to be a lot of social reorganizing as people realize that they don't have to commute into the office anymore. They can get themselves a nice backyard and a dog. And so yeah, there's that. I'm really excited to see what happens in the next couple of years with the UK government actually does a very good job supporting entrepreneurial businesses. Things like the FCA Sandbox and the British Business Bank are great innovations. But I've heard of other countries that are doing even more. The Vietnamese government is building their own FCA Sandbox, or their own sandbox that includes funding as well for early stage financial services companies. And the Singaporean government has been leading there for a long time. So I can't wait to see what happens in the next few years there.
Yeah, that's really interesting when you talk about entrepreneurship. I mean, obviously there are initiatives in place, and we heard a huge amount of support outlined yesterday to do with government sort of backing for things like the Kickstarter scheme, where money's been allocated for young people and people who've been sort of long-term unemployed to get into industry. If we're looking at sort of entrepreneurship more broadly and moving away from actual government policy, you've got the benefit of years of experience now. I won't emphasize the years too much, but you've got the benefit of these years of experience now. For those people who believe that entrepreneurship or being an entrepreneur is a career path for them, which in the UK we're not great at sort of championing, I don't think. What advice would you give them, to the youngsters that want to become entrepreneurs, particularly in this market?
Honestly, like, go work for an early stage startup. Go work for an early stage startup, one where you really respect the founders, and particularly ask the founders, how transparent they're going to be around building that early stage company. Like, I was incredibly fortunate to work for the founders of Monzo as like one of the first employees, and Monzo being a transparent company, there was a lot of openness around the process of fundraising, the process of delivering on key milestones to de-risk the business and to show to future investors that the business was worth investing at progressively higher valuations. So that sort of thing, a lot of people who work for early stage startups don't get to see. So I would say go work at a startup and then try to be an early employee at a startup. And then finally, if you feel it's for you, and it definitely isn't for a lot of people, then have a go at doing it yourself. But also, like, starting a company, like if you want to like lie awake at night between 2 a.m. and 4 a.m. every day, then the startup is definitely the way to do it. Yeah, but it, like with risk comes reward, right? Sometimes.
Yeah, absolutely. Do you know what? I think that's the first time I've heard somebody give an actual description of the career pathway for entrepreneurship. I think that's fascinating. Before I let you off the hook, you mentioned working for innovative startups in that last answer. I was going to ask you, what's the worst thing about working for Monzo, but I'll resist. What's the best thing about working for Monzo?
It was the same thing. It was the constant just striving for the next thing. Like, Monzo doubled in size so many times, doubled in scale so many times. Every 6 months, everything broke. So you just get comfortable, and then the next fundraising round would happen, or Tom would come back from holiday and set new, unbelievably ambitious goals, and like. And you'd be like, cool, we've just got, like, I remember the most obvious example was we used to hand stuff the cards into envelopes. And I went away for a week and I came back, and like, instead of one table, there was now 20 people hand stuffing cards into envelopes and then, it just suddenly we couldn't do that anymore because it was just too, like, we couldn't keep up with the number of cards we had to print. So just that constant, you can never ever get comfortable. It was always going to double in size, and you just like had to think like 6 months ahead, like, how are we going to cope when it's at 10 times the size? So that was what made it stressful and fun, but also one of the most challenging times of my entire career, and I wouldn't exchange it for anything.
That's a marvelous bit of insight. I think I should also revisit the point that we were talking about on entrepreneurship. You said there, you asked, you outlined sort of a pathway for a career in as an entrepreneur, but I should ask as well, what do you think will help drive entrepreneurship as a sort of final point within this industry, within open banking or sort of financial services more broadly?
Yeah, like, now's a great time to start a company. Like, there are bank as a service and financial infrastructure as a service. Companies like Yabota and Modular that Fronted use, and companies like Stripe and Google Cloud Platform and AWS, and all of these things that exist now just make it so easy to get started. And it is honestly a fantastic time to start a company.
I think that is a great place to leave it. Thank you so much, Simon. That was a fascinating session, and I look forward to speaking to you again soon.
Cheers. Thanks a lot.